we also just have our dinner and we just got ourselves some drinks. Okay, so for those who's here early on time, thank you for being punctual. So I think let's be fair for those who's on time. We will start the session. So those 20 over of you, thank you for being on time. Let's start. Okay, so first and foremost, welcome to WAB AMA Ask Me Anything series. I'm Jason, your facilitator for today's session. And today we are very glad and privileged to invite Mr. Seow, who is the head of investment research of Unicorn Financial Services, who have more than 20 years of experience in this area. Welcome.
Thanks, Jason.
All right. So maybe before we start, let's start with something more lighthearted. Can you share with us more a bit about yourself? How you get started into this investment space?
Okay, sure. Okay, maybe I share what am I doing now.
Sure.
Okay, like just now what Jason introduced me. I am now head of investment research of Unicorn Financial Solutions. Unicorn Financial Solutions is a training organization of this course. I've been here for 16 years now. Now I'll say taking care of client assets of about $500 million. I think it's a very important duty that I have. Of course, I think at this stage I'm also looking at training more people. So it's so that eventually they could also be succeeding. I think that is important for succession planning. And training people is also been training my own analysts, portfolio managers. That's also an important part of my job. Okay, so before this, I was an auditor with PricewaterhouseCoopers,
PwC, one of the big four.
5.5 years there. And I graduated, I started investing when I graduated. That was 2001, when the .com crashed. Okay, so since then, about now, from 01 to now, so about 21 years. Of course, there have been several phases of investment. Sure. The first phase, I really don't know what to do. Okay, in fact, maybe if I can backtrack a bit, I just share why did I even start investing. But the reason was because it was not because I wanted to invest. I actually wanted to have my financial independence because I really wanted to do something I love to do, and then I don't want to ask. Once I found it, I don't want to ask how much I should pay. I want to do it regardless. Because one of my childhood dream actually to be a conservationist.
Oh, conservationist, that's very interesting.
And then my primary school teacher asked me a question. And then she asked me, so that very rich? And no, why do you ask? Okay, those people don't need to work. They can do that because they're that fun for them.
Okay.
If you're not rich, then you can't do that.
Okay.
Because that struck me as well. Hey, why is it that job has to always tie to money? Can't I work because it's meaningful and I love doing it? And I say, well, to be practical, if one day happens that my top income does not come from my work, must come somewhere, and hence I come from assets. And I basically planned I needed to have $5,000 a month, so I need to plan for $1 million. For the $1 million, I can invest at 6%, let's say from dividends. Then I get the $5,000 of recurrent income. Okay, and I say I don't have a high wish for my lifestyle. I say if I have $5,000 a month, well then I will have this thing called freedom. I can choose what I love to do without having to ask the second question: how much does it pay me? So it was that got me started. It didn't work at the start. I don't know, there's no courses like that, or maybe I didn't know any courses like that. So what I could do was to pick up magazines to read, to see what stock to buy. I looked at brokers' report. For the whole 2 years, it was disastrous. Okay, whatever I invest, I look for 50%.
50.
50.
So more half of it.
Half of it, or more. Okay. But thankfully, I don't have a lot of money. At the time, my starting pay was only $2,000. I saved about $400 every month. After a few months, I buy one stock. So over the first 2 years, 2001 to 2002, I basically bought about 3 stocks. Each one average was about 50%. And after 2 years, I think maybe this is enough. I'm probably not doing it right, which is why I started to. One of my friends, previous colleague, actually gave me a book of Warren Buffett called The Warren Buffett's Way. I mean, I read it, it makes so much sense. He gave me a framework to start looking at stock investment. And he said stock investment is so actually nothing very dangerous. If you know how to do it. Most people don't know how to do it because they don't know to do what they did. And ever since having the right framework, my results changed 180 degrees. I started to make all the right investments. Even there were times when I invested in fraud companies. So there was in late 2000, there was this S-chips, China company listed in Singapore. A lot of them end up to be having problems. I invested in a few, but actually I got up before the fraud company. I actually made money investing in fraud companies.
Okay.
What did I tell you tonight? Of course, being accounts background has helped me. But even without, I think it's good to pick up some of these basic skills. Was that really helpful? And of course, because of this, I started, if I got this talents and I love doing it, and hence I subsequently joined Unicorn to be able to also help people with what has helped.
Okay. I wanted to confirm a number that you shared earlier.
Sure.
You are managing how many assets under management at the moment?
$500 million.
$500 million, my friend. $500 million under your portfolio. Yeah. So if I can just do a quick recap and summary, you started off with self-learning. Yes. And you
Self-structured.
Self-structured, self-learning, self-hearsay, pick up some information here and there, and I believe you pay a school fees. Okay, 50% of 200 may not, or 50% of 400 may not be a lot. But imagine 50% of 10,000 or 100,000 is really a lot. So let's look at percentage, right? 50%. So you pay your school fees and you decided that there has got to be some strategies. There have got to be some ways until someone taught you a book, you read the book, and a aha moment comes to you. Yes. So is that the reason why you wanted to move into training and share more people who wanted to do investment? What exactly is the correct way of doing investment? Is that your push factor or motivation factor behind to move into training space? Okay.
Maybe I would say there are two reasons. One is, of course, my own experience. Sure. I say that when there's no one to teach me, and I have to self, of course, thankfully, I started early, so my school fee was not that huge. But still, I pay a school fees, trying to find my way around. And I have no community. It means I don't know any friends who are doing investing. I'm doing all by myself. I have to research by myself. I have no one to discuss with until later on in my life. Yeah. Then I say, I find that. And hence, well, I thought, if now that I know it, and if I can share with people how they may not have to walk at least the kind of journey. If it's worth, people never get the right way. Maybe a whole lifetime they would have made mistakes and maybe give up investing, which is actually very could be very beneficial, but they never taste it. Second reason is actually in my own profession. Okay, we have this service called a portfolio repair service.
Or portfolio repair service.
Okay,
can you share with us more?
Sure. Which means people who have been investing, but after a while, either it didn't work, so they lost money. It could be because they never know how to do it. Some actually know how to do it, but because of life responsibility, they have no more time to look after it. And like unattended garden, called the lalas. And hence they said, well, maybe can you help me take a look at my portfolio for a fee? How much? How can I restructure my portfolio? And hence, some of it I just share some big figures just for understanding how bad can it get.
Yes, please.
So there was okay. This is not because these people, they are friends of my colleague, so they brought these friends to me. So there's these two couple. This couple I remember, they are probably in their 50s, and they are actually selling drinks in a coffee shop. Okay. And when I first look at their portfolio, I actually congratulate them. Half a million. I said, wow, $500,000. You actually accumulated $500,000. And the husband actually got angry, saying, hey, you don't even know what was my initial investment. You congratulated me. Then I realized I probably said the wrong thing. Okay. Then I said, if you don't mind, then I asked, what was the initial investment? They said, well, 1.5 million. And it dwindled all the way to $500,000, which is why my colleague, brought them to me to see what can be salvaged. Of course, I asked him actually if he can share with me what's the reason that it dwindled by 2/3 from 1.5 million to $500,000. And he shared that a lot of times he will be having coffee with his friends and they'll be excitedly telling him, wow, they make so much money from stock. Okay. And they'll tell him the name. And he went to buy. And nobody told him what to sell. And hence, a lot of these are speculative stock, which is why it's so exciting. Sure. And because of that, he never made money. And he said, fool me once, shame on you. Who means why shame on me? But I said, the worst thing is I keep falling for it because when they tell me excitedly, I can't help but go and buy. So after a while, yeah, then my hard-earned money. Imagine a couple just selling drinks in a coffee shop. How hard is it to earn 1.5 million?
Exactly. And more so they are nearing to their retirement age of 50s, correct? So yeah, it will be more painful to them. But earlier you hit the word community. I believe community is very important. You will be with the right group of people, interacting with each other, helping to keep other in the lookout, say, hey, I happen to this has got some problem. So in the community, in the spirit of sharing, you will tend to raise up certain points to take note. Because I have some little investment, but not really a lot. Knowing when to buy is one factor, but I think most important is also knowing when to exit or get out. I think that's very important. And yeah, so your portfolio recovery is very good service as well. So yeah, so that is the reason why you feel that okay, there is a need for you to step up, to involve in training to equip more people.
Yeah.
Okay. So I also understand from Unicorn, you are also the principal trainer for one of their courses, intelligent investing in the era of disruption.
Yeah.
It's very interesting, intelligent investing in the era of disruption. So I see it as 2 points, intelligent investing and in the era of disruption. How do you think of this name and what do you think does this few-day course can equip a student with?
Okay. First, I don't want to, I really need to reset the expectation correct. Yeah. I always believe the proper way to focus investment is never a get rich quick kind of thing or throughout, just come for 48 hours and you reset for life. Yeah. Well, I'm not a believer of that. I believe every good thing needs to come with some hard work.
Exactly.
Yeah. So intelligent investing, to put it simply, is actually value investing. Yeah. And some people say value investing is dead, especially the last few years, because we had a very good run, fueled by free money, printed by the central banks. I always tell people value investing is never dead because it's about every asset value, and then you try to appraise the value so you know what price to pay, or at least what price not to pay. A lot of people forgot about that. Of course, now a lot have to pay a full price because of some of these speculative companies have probably gone down like 70%.
70%.
Even like Bitcoin probably fell about that kind of percentage. Yeah, and hence it's about how to first. Let's talk about share a bit about actually what providing covered in this course. So it's about then valuing a business, knowing how to identify a great business to make sure you don't overpay, and hopefully your wealth can grow. There isn't a lot of buy and selling needed. The great thing about value investing is a lot of homework is done upfront. You do the homework, you find a great company. Maybe you may not even need to sell for a full lifetime. But you still need to, I'll still look at the earnings quarter to quarter, just to make sure there are no surprises. But other than that, if I find a great company, actually hold it for a very long period.
So if I put it in a simple layman term, correct me if I'm wrong, because you are a subject matter expert, value investing is actually identify the true value of what a company is supposed to be worth versus how much it is being listed or traded. So if let's say a value of the company is at, let's say $1, but it's trading at, let's say 50 cents, am I right to say that is a discount? And
yes.
Yeah.
Okay. However, the value is it's not like engineer should I can calculate it in exact sense. It is look, so the same person can look at a company and give a different value. But there's a gauge. I share a very interesting experience.
This is more interesting.
Yeah. In fact, it was one of my personal investments back in the subprime crisis. And it's an asset probably most people know. It's called Fraser Centerpoint Trust. It's a REIT. And at the time, it was owning 3 major REITs. One is the Causeway Point, Woodland. One is North Point at Yishun, and Anchor Point at Alexandra. So the share price basically went down from about 130 down to 60 cents and 50 cents. Yeah. So it went down like 60%, 65%. Yeah. And then the dividend yield went up 13%.
13%.
Yeah.
Oh, okay.
Of course, at this juncture is important because sometimes if the price drop because the fundamental value has fluctuated, then it's not worth it now. But if it's just due to a wrong pricing because of market theory, then it's great. So what did I do? Besides looking at the financial, I take a train last time to Causeway Point, take a look. See, all the shops are rented out. They are still expanding at the time. I go to North Point, take a look. Hey, got the customer traffic are all there. Nothing wrong with that mall. But how come the price dropped 60% and a 13% dividend yield? So that's where I invested 30,000 in 3 different tranches. I didn't actually know until later on I thought out those 3 tranches that I bought. You can check out what's about from about 65 cents to 57 cents. That was really the bottom of Greater Center Point Fund. Of course, I won't say that I always buy at bottom, but I happen to check that 13% dividend yield. You don't come across.
Yeah.
And happen that asset I know well. If it's some far away, dubious, unknown assets, maybe I don't have. That's why actually doing your own fundamental homework. One big benefit is confidence. If I have no confidence, but of course if I buy and things go up, it's easy to have confidence. But it's when I buy and the price comes down, that's the test. What if I bought it and I sold it because of fear? I would have been a pity. I sold a great asset at a ridiculously cheap price. But because I know the assets, it gave me the confidence. And hence, instead of buying, I pick it up. I bought it. And it may be quite a lot of money. Yeah. Is it difficult? Well, it's some homework. You need to take a train to Causeway Point.
I think you're a very hardworking investor. You actually take a train or just to go there to recce and survey the mall to see the traffic flow. So I think this is what value investing is all about, to determine the value of the company, whether is it worth investing. Right? But do you need to be very strong in accounts, in maths, in order to attend this courses, or it's actually quite easy to pick up? Okay, because you have got experiences in one of the big four, so you can accounting background. But what about some who wanted to know, should I buy this company? Example, just to name a few, for example, is it a good time to buy into SIA? Is it a good time to buy into some other stocks like banks with the recent prices? Do they need to be very good in mathematics or to read about these financial statements in order to learn? Yeah,
actually that's one aspect of it. So I would say that well, some homeowners we actually train in the class as well, so that you can pick up. You know where to find. You can pick up the numbers of Seow. But I cover 4 parts of it because a lot of people think that investing is very numerical. Actually, the starting point is not. I say there 4 areas. The first area I look at is industry. Industry, because I don't want as I said just now, the second part I've not answered. Intelligent investing era of disruption. Because we are facing we are definitely in an era of around internet technology is one big change, climate change is one big change. So with these changes, there are industries that are rising up, there are industries that are in the demise. So it's very important to avoid industries that the future is on the way down. So that's the first thing. And that is non-numerical. It's very, you need to read, you need to have a feel. But great industry might not make it. One prime example are airline. 100 years ago, everybody would have thought airline would flourish. And indeed it had. But as a whole, airline are losing billions of dollars. Because the second one is the company dynamics. Do you need that? Which is a lot of competition. Are you able to keep? Because when you have a very good company, competition want to stand up and snatch away your customer, take away your profits. It's the capitalistic world. And are you able to fend it off? Some companies can fend it off hundreds of decades, like Microsoft, founded by Bill Gates in 1970s. Till today, we are all still using Microsoft Words, Microsoft Excel, even though it's not the best. McDonald's, same. So these two are actually non-numerical. Only the third one, and we help our friends, learners, to look at some financial metrics. Financial metrics of the third one. And they are quite set financial metrics, so they're not all over the place. If you know the number, you can just plug it in, see for yourself. Even after you graduated, we actually teach people how to do it. Actually, once you graduate, you can find a public website these numbers. You don't even need to find them. But in the course, we actually want to train you to calculate because we want the learners to know where to get these numbers. So that they feel for the numbers. And if need to, they can look at it themselves. But otherwise, publicly, this available. Then only after fulfilling these three, to say this is a great company in a great industry, then that's where we value the company to make sure we don't overpay. Valuation, a lot of people like part of valuation. What's the right value? Today, I think it's no longer about that. Trying to calculate the right dollar. Everybody has a different view, different valuation. I agree. It's just a boundary to make sure that this is a great company, you don't get mesmerized by the hype and end up overpaying. So that's actually what the course needs to cover. And the community really, I say when you graduate in a good grasp, if you apply it, one of my very strong confidence, you will avoid a lot of these companies that will make you permanently lose money.
Permanently lose money.
That means those you will to hold 10 years from I'm very sure you're going to avoid that this type of companies. However, you will still need to a lot of practice to get a feel actually what is the type of company that's right for you. Because everybody is different. For example, I may not know certain industry very well. But let's say someone who's working in that area, maybe they may know it better than that.
So that's where the community plays a part, right?
Yeah, that's where you share. Correct.
Okay, right. So in these 4 days, in these 3 days of courses, you will learn all this interesting. There'll be a lot of case study, a lot of practices, correct? To give you real life case study, real life example, and actually guide the student or trainee where to pick this information, how to get this information. Yeah, okay, that's interesting.
But most importantly, we want to make sure that the learners finish the course without hand-holding. They should at least be able to start. So we actually give them a worksheet or a checklist to actually check off all these. As I say, that's why if you pass all this after doing your homework, it's a very good chance. You are finding a reasonably good quality company, and hence, with the time horizon, you should be able to make money.
I think this would be great. If not, most investors, they will be keep chasing on the hype. Everybody buy this, then they'll just jump into the bandwagon, but not knowing that it's overpriced, overvalued, or they are just at the tail end of it. So if you attend the course, you yourself is equipped with skill to do your own calculation, to identify the industry, company dynamic, financial metrics, and the fourth one is again valuation. Yeah, then you will be able to be the captain of your own portfolio to determine whether yes, should I go for it, or no, I would just want to stay out because it's overpriced or overvalued. Yeah. And like what Gary mentioned, we are not looking into the exact dollars and cents because there's always a personal view of it. So a good gauge of boundary will be quite safe, that you know that as long as you're within this range, you'll be good. Got it at the right? Oh, okay, I can look into investment also. Okay, can you share with us, since you have been doing this training of courses for quite a number of years, any particular case study or any particular training struck you the most? Or anybody actually come back to you and say, "Oh, thank you for sharing with me all this thing. They actually pick up some skills, important skills, etc." That struck you the most.
So one of the case study is actually on TSMC. TSMC is the leading cutting edge chip manufacturer. What a lot of things we use today, like our phone or uses chip. It's the brain of technology. So I just used it as a case study. He of course went to do it himself. He was at the class inside. And after the class, he decided to buy a company. And he told me a year later, he actually doubled his investment.
Oh, double.
It was so the what now is come down, but he has still made money. So it's about selecting right company, great company with growth. Over a long term, you'll be very well rewarded. Of course, some of other learners told me, in fact, at the start, so actually it's not just making money. It's just pick their interest. So they started to look out for company. Like they look out, who make this? Who make this? Is it a good company? So it picks their interest. Some of them actually become like a hobby. And then they come and check, I look at this company. And one very interesting friend, he said he actually dreamed of this. He actually think of this company in his dream. Okay. It's called Libra. And then they woke up and they went to say, got this company called Libra Technology. Okay. And he went to do a research and then he sent me an email. This is what I've done. Can you further value add further? So I shared with him, I bought some shares. Just very recently only, but I don't know how it's done. Okay. But help people. So some is to make money. Given time that I'm quite sure Some for DIY like myself. I mean, over time investment is no longer just money. It is actually an interest. Of course, that is to some maybe we never have the interest.
Okay. So do you think on the second part, era of disruption, just for sharing purposes, and I don't think we should comment on the economy, do you think now the market is quite in the noisy or messy stage at this point of time? Do you consider this also as an era of disruption?
Well, I can say there are a lot of problems in the world today. Maybe that you can say that's a disruption, although in by naming of the course, the disruption does not mean that. It means a new way to satisfy human needs. Like for example, instead of newspaper, I hardly watch news. I hardly watch TV anymore now.
Oh, okay.
YouTube, read on. So a lot of internet. So that is still a disruption. People don't advertise newspaper on TV or much lesser. They advertise like Property Guru, SG come up for their car, for their phone. So all these are the disruptions I'm talking about. But actually, you brought up something actually a very worthy point of me to share on, which is this. In fact, the very type of companies that I'm trading on now is giving a good discount. I just give an example like a company like Microsoft, which is growing at about 15-20% a year. And its share price actually gone up 10 times in the last 10 years. And of course, now it's declined from $350 to now $250. So it declined quite a bit, and it might continue to drop. And then I think this, for people who are starting, it might give them a very good starting point, because for the same company, you are basically paying maybe only 60%, 70% from a year ago, some even lesser. But still, I'm not stressing now, the right company first. It's not just because the price has fallen 90%, means it's a great value. Let's make sure that fundamentals are not affected, like my cases of the Traders and the Point Trust. And it did, in fact, I'm very excited now because, but as I said, I can't time the market. So what I'm going to do is continuously buy over this whole period. If the market goes down further, I will continue to buy. But I need to identify the right company. And then right through it short. Because I made my first million was my last crisis, the 2007 subprime crisis. I really literally keep buying as my stocks keep going down. And the moment, because in March 2009, it was the bottom, by December 2009, my total wealth has doubled just in 9 months.
Wow, okay.
But it requires the persistence to keep buying, the market keep going down. So after 13 years or 15 years, from 2007 to now, another such opportunity is opening up. So I say for people who are looking at starting, like I think a great window of opportunity is opening up. This happens to be the right time.
Correct. So I think if you are equipped with the right skills, the right knowledge, persistency in doing the right thing, keeping to your faith, and the confidence of what you're doing is very important. I don't think we should say into committing to doubling your wealth, but I think it's a good opportunity to grab some undervalued company at this point of time. So if you pick up the course, if you attend the course, I think you will be the own subject matter expert to find out what exactly are the companies that undervalued. Right? So this could be one of the key takeaways for attending this course. Any other interesting things or key takeaway that you can think of if you attend this course?
Yeah. So I think I want to say that being able to be the captain of the ship is very important, because everybody has that views. If you are not sure of what you're buying, it's not, you can even buy the right thing, but if you have no confidence to go into it, it's as good as you didn't make the right choice in the first place. So I think that I can't stress enough, and it requires a journey. It's not really after these 24 hours you suddenly be an expert, but it gets you to the right thing, the right foundation, and then you can build on with the community. So I think I think that probably covers most of what is.
Sure. I think it will be a great value if you to attend this course, but if you to miss out for this course, you'll be a pity, because you will be quite at a loss, especially at times. And now you'll be struck in the position where should you keep, should you cut, or should you continue to buy. But with the right knowledge and skills, like I said, I can't emphasize much. Good practice makes good practice give you good results. So if you know exactly what to buy, your confidence offers after going through the industry, the company's dynamic, the financial metrics and the valuation. Wow, I think I just memorize the four of them. So if you know this four well, you are confident of what you're buying, you're confident of what you're getting, it will lead you to somewhere generally, correct? Okay, so any last parting sentence or last parting message to our attendees over here?
Maybe I share something I read a lot.
Yes, please.
So somebody was asking a question. They said, I've just started out on $1,000. What should I invest? And somebody commented, which I thought is a comment has a lot of wisdom. Say if you have a lot of thousand, invest. If you have $1,000 when you're starting out, invest in yourself. That means your $1,000, even if you make the right investment, how much can you do? But when you invest in yourself, you will constantly be able to make all the right decisions. And hence that's really valuable over time. So I say similarly, invest into yourself and nobody can take it away from you.
I think I also read about somewhere that invest anything above your eyes or invest anything above your ears. So that is basically your brain. I am a firm believer of education because if I teach you how to swim, you know how to swim. Even if you didn't swim, somehow, somewhere, when you're thrown into the sea, you will be able to grab the skill back. Just like cycling, I just taught my child, my youngest kid, how to do cycling. At the moment, initially, she may fumble a little bit, but once she gets steady with two-wheeler, even if she didn't ride for a couple of weeks or a couple of months, throw her into a bike, the skill is there. So if you are equipped with the skill, no one else can take this skill away from you. And I'm also very glad and pleased to inform all of you that the course that we have been talking about, Intelligent Investing in the Era of Instruction, is actually IBF accredited. So in the adult trading space, IBF accredited training program, this is funded. So if you want to know more about the course date, the course fee, or how can you enroll, please contact us at enquiry@wablab.sg, which will be posting in the chat group. Or if you can also contact the person who invited you in for the session. So with that, we thank you for spending your time with us on a Thursday night. And we hope you also pick up some important and interesting metrics from here. Like for my case, the 4 main pointers. All right. Thank you, KB, for your time.
Yeah.
Thank you. Thanks, everyone, for your time. Thank you.
Bye.
Bye.